Welcome in. I know exactly why you're here.
You want to stay sharp.
Exactly. You are the kind of person who needs to be the most well-informed person in the room, but you absolutely do not have the time to get bogged down by endless information overload.
Nobody does.
Right. You want the signal, not the noise.
Hey.
And that is exactly what we're delivering today. Today is Sunday, March 1st, 2026, and we are synthesizing a massive stack of crucial marketing and advertising insights that just dropped over the final week of February.
We've combed through all the headlines, the research, the tactical breakdowns, and we really just distilled it all down for you.
The mission for this deep dive is simple, but it is critical. We are going to connect the dots between big tech platform updates, some massive AI agency shakeups, and the grassroots local marketing strategies that you can actually use.
Right, because giving you leverage is the ultimate goal here.
Yes, we want you to be able to practically apply all of this the minute you finish listening. We've got quite the menu today, too. We're looking at a sneaky Google Ads update rolling out literally today.
A big one.
Oh, yeah. Plus some major AI acquisitions by Canva. We'll dive into why marketing is fundamentally turning into a hardcore finance game, and then we'll wrap it up with a highly tactical checklist to turn a dead-end contact page into a conversion machine. And to help me analyze all these sources, I've got our resident expert here.
Glad to be diving into this stack with you. And as we go through these sources, which range from high-level TechCrunch headlines to very granular search engine land tactics, I want you listening to keep one overarching theme in mind.
What's the through line?
Well, while they seem completely different on the surface, they all tell a beautifully unified story about the rapidly shifting balance of control in the marketing world. The ground beneath our feet is moving toward automation, and we just have to adapt our footing.
Okay, let's unpack this, starting with our first major topic from Search Engine Journal. This is a massive update, and as I mentioned, it actually goes into effect today, March 1st, 2026.
Right, today.
Google is fundamentally changing how budget pacing works for campaigns that use ad scheduling. I read through the announcement, but I want to make sure I'm grasping the actual real-world impact. Can you break down the mechanics of what Google is actually changing here?
Yeah, the structural shift here fundamentally alters how smaller businesses operate on the platform. Traditionally, advertisers have used ad scheduling as a sort of a soft spend cap.
Like a guardrail?
Exactly. You tell Google to only run your ads during specific windows, maybe your store hours or when your sales team is actually at their desks to answer the phones. The historical assumption was that restricting your hours naturally restricted your overall monthly spend.
Because there's no point in paying for clicks when nobody is around to catch the lead.
That was the logic. But the new reality is vastly different. Google uses a monthly limit formula calculating your average daily budget multiplied by 30.4.
Okay, 3.4.
Right. And starting today, the algorithm is pushing aggressively to spend up to that full monthly limit, but it's doing it inside whatever restricted time windows you set. Yet, the platform is no longer passively accepting a lower monthly spend just because you limited the hours. It's essentially saying, we will spend the entire monthly allocation. We just have to accelerate the burn rate during the hours you gave us.
That is wild. It makes me think of managing a sales floor. It's like telling your sales team they have a monthly quota of leads they're allowed to buy from a vendor, but instead of pacing those lead purchases out evenly over 4 weeks...
They buy them all at once.
Right, they buy the entire month's worth on the first Tuesday afternoon.
Yeah.
Now your team is drowning in leads for 3 hours and starving for the next 3 weeks.
That analogy hits the nail on the head.
Right.
You set those ad schedules to match your staffing availability because you want a steady, predictable flow of leads.
Yeah.
You want the volume to match your operational capacity.
But wait, let me play devil's advocate for a second. If Google's AI is as smart as they constantly claim it is, shouldn't we want it to spend the money when it sees the absolute best conversion opportunities?
In theory, sure.
Even if that means the daily budget is gone by noon, isn't peak efficiency better than artificial pacing?
You are hitting on the exact argument Google makes to justify the change. The potential upside is better efficiency. If the machine learning truly identifies the highest intent users clustering in the morning, concentrating the spend there theoretically yields a better return on ad spend.
I sense a however coming.
However, that assumes the algorithm perfectly understands your business context, which it rarely does. The glaring downside is the extreme unpredictability. You're going to see a much faster budget burn during the day.
So it just vanishes.
Yeah, you might log in at 1 p.m. and realize your entire daily budget is exhausted because of a surprise spend concentration. It completely breaks the mental model of control that business owners have relied on for years.
Which leaves the advertiser completely in the dark regarding when their ads will actually show up within their scheduled window.
What's fascinating here is how this ties into a much larger macro trend we've been tracking. Advertising platforms are increasingly optimizing toward platform-defined outcomes, completely overriding the advertiser's desire for manual control.
They think they know best.
They inherently believe their AI knows better than your manual schedules. So to survive this specific shift today, you have to take defensive action immediately.
What does that look like?
You must actively adjust your daily budgets, likely dropping them down to keep your monthly totals stable in this new aggressive pacing environment. You need to watch your campaign pacing like a hawk, and you have to tighten your conversion guardrails so the algorithm doesn't waste that concentrated, accelerated spend on low-quality clicks.
So lower the daily budget to defend the monthly budget and brace for a wild ride on pacing. Got it. Now, speaking of AI taking over the steering wheel, here's where it gets really interesting. Let's transition over to some massive industry headlines from TechCrunch.
The Canva news.
Yes. Canva has just made some aggressive acquisitions. They bought a motion and animation startup called Cavalry and an ad performance optimization tool called Mango AI.
We are looking at a textbook example of workflow compression here. The motivation behind Canva spending this capital is to own the entire creative workflow from end to end.
Which makes sense. Normally, a creative team designs the static asset in Canva, exports it to a dedicated video editor to animate it, exports it again to upload it natively to an ad platform, and then relies on a fourth analytics tool to figure out if it actually worked.
Canva wants to obliterate those intermediary steps. The cycle is compressing down to a single seamless loop. Produce the creative, launch it, learn from the data, and iterate immediately, all without leaving their ecosystem.
That's huge for smaller teams.
For small and medium businesses, this completely changes the competitive landscape. Good enough creative is now just table stakes.
Because anyone with a Canva Pro account can generate a highly polished animated asset in 3 clicks, the aesthetic advantage is just gone.
The real competitive advantage is rapidly moving towards speed and rapid iteration. Testing is getting so incredibly cheap and fast for small teams. That inherently raises the bar for any competitor out there who isn't testing.
Right. If you're too slow, you lose.
If your team is still spending a month perfecting one primary image while your competitor uses integrated AI to launch, analyze, and iterate on 50 variations in a week, you are going to lose market share.
I want to look at this from the complete opposite end of the business spectrum because our next source is a piece from The Guardian about WPP. They are undergoing a massive restructure, merging agencies, cutting jobs, and explicitly framing this entire overhaul around becoming a simpler, lower-cost AI-enabled business.
A massive pivot for a giant agency.
Exactly. But if the work of creating and iterating is getting so compressed, are enterprise clients really going to keep paying massive agency retainers for work that AI executes in a fraction of the time?
If we connect this to the bigger picture, the line between what Canva is doing for small businesses and what WPP is doing for global enterprises is the exact same line. Both moves signal that marketing services are being rapidly productized and automated.
The busy work is disappearing.
The manual labor of marketing is being stripped away. The value proposition of an agency is no longer look how many hours we spent making this. The value has to shift entirely to the business outcomes they generate.
Which means listeners who currently employ agencies need to start asking some incredibly uncomfortable questions during their next status meeting.
Absolutely. I would pose this directly to you, the listener. If you hire an agency right now or you currently have one on retainer, can they explain to you exactly how AI is improving your results and not just padding their profit margins?
That is a brilliant distinction. If they are automating the work but billing you for the old manual hours, they are essentially arbitraging the AI against your budget.
It is the most critical distinction in vendor management today. If an agency is just using AI behind the scenes to cut their own labor costs, but they are still charging you the same monthly retainer without increasing your speed to market or delivering better measurable outcomes, you're being taken advantage of.
You're paying for the past.
You're paying premium prices for yesterday's business model. You must demand that the efficiencies of AI are passed down to you in the form of speed volume of testing and ultimate performance.
And performance is the perfect keyword to pivot on because the very definition of performance is changing at the highest levels of business. This brings us to a fascinating insight from Digiday. They're reporting a fundamental shift happening in the C-suite right now.
The rise of the CFO.
Yes, chief financial officers are increasingly becoming the most receptive stakeholders for marketing strategy conversations. In many corporate contexts, the CFO is holding more power over marketing direction than the actual chief marketing officer.
This is a profound shift in corporate psychology, and we need to translate this down to the ground level. Whether you are operating inside a massive Fortune 500 corporation or you are running a regional B2B services company, this is your new lived reality.
It applies to everyone.
Marketing is no longer viewed as a mystical, creative endeavor that gets a pass on hard metrics. It is now being judged entirely like a hard finance line item.
But I have to push back a little here. Brand building inherently takes time. You cannot always measure the direct pipeline impact of a billboard, a podcast sponsorship, or a broad awareness campaign the very next day. If the CFO is demanding immediate ROI on every dollar, doesn't that kill long-term brand equity?
It definitely threatens it, but the leniency for unmeasured brand building is simply gone in the current economic environment. CFOs aren't necessarily against brand building, they're against blind spending. If your overarching marketing efforts cannot be directly tied back to the pipeline, tied directly to revenue, or at the very least, tied to incredibly strong leading indicators of future revenue, that budget will get cut. The CFO mindset requires a mathematical justification for the investment.
So we need a tactical fix for this. If the finance folks, or even just your own accountant if you run a smaller shop, are breathing down your neck, what is the play?
The practical takeaway here is that you have to aggressively tighten up your measurement stack. This is the infrastructure of your accountability.
Meaning you need to be flawlessly tracking every single phone call, you need to track every form submission, you need to track the actual jobs or deals that get booked from those specific forms, and you need to track your close rates on those specific marketing-originated deals.
Exactly.
The ultimate goal is to make the equation of what we spent pointing directly to what we got painfully clear to anyone looking at the books.
If you authorize a $10,000 spend, you need to be able to pull up a dashboard that points to $30,000 coming back in closed won business. If you cannot do that, the new financial mindset of business will view your marketing department as an expense to be minimized rather than a growth engine to be scaled.
So what does this all mean? How do we actually build that measurement stack and capture those leads flawlessly so the CFO is happy? Let's transition from this high-level strategy down to a very granular, immediate action item that you can implement today to start generating those trackable metrics. This comes from a great framework published by Search Engine Land.
Bringing high-level strategy down to tactical execution is where you actually win.
The problem Search Engine Land identifies is almost comically common. Most local or mid-market business contact pages are absolute dead ends. You click Contact Us, and it's just a blank, sterile page with a sad little form and maybe a generic info@email address.
It creates massive friction. A user has navigated your site, read your services, and decided they want to reach out. They are at the point of highest intent.
And then we just drop them.
Dropping them onto a blank page with a naked form is the equivalent of walking into a premium store with intent to buy, only to find an empty room with a suggestion box. It kills trust instantly right at the finish line.
Let's give the listener the 5-step checklist to upgrade that contact page from a dead end into a powerful conversion asset. Step 1 is complete info. This means full NFP, name, address, and phone number. But why do so many businesses get this basic step wrong?
Because they treat it as a set it and forget it element when they build the website. They forget to update it. They forget to add seasonal hours. There's nothing more frustrating for a high-intent prospect than showing up to an office or calling a number based on the website, only to find out the hours changed 3 months ago.
Yeah, that's a quick way to lose a customer.
You also need to offer multiple modalities: text, email, and active social links. Let the user communicate in the medium they prefer, not the one that is easiest for you to manage.
Step 2 focuses on navigation. The right map. Don't just drop a static image of an address pin. You need to embed an actual Google map and link it directly to your Google business profile. Beside it, include a highly visible, impossible-to-miss Get Directions link.
A static image forces the user to open a new tab type in your address manually into their Maps app and hope they spelled it right. Every second of friction is an opportunity for them to abandon the process and call a competitor. Making the directions a one-click process removes that friction.
Step 3 is a major psychological shift. Trust proof. Put trust signals directly on the contact page. Do not make them click back to the homepage to remember why you were great. Put your credentials, your industry association logos, your awards, and most importantly, testimonials right next to the form.
We call this the abandonment moment. When someone is staring at a form asking for their phone number and email, they experience a microdose of anxiety.
Yeah.
They wonder, am I going to get spammed? Is this company legit? By placing social proof, specifically reviews that include the reviewer's first name and their local city for context directly adjacent to the submit button, you provide a wave of reassurance exactly when their anxiety peaks. It physically saves the conversion.
Step 4 deals with the aftermath of that click. Set expectations. We've all experienced the black hole of submitting a form and having no idea if it actually went anywhere.
The fear of the void. To combat this, you must tell the user exactly what happens next. State your response time clearly right above the form. For example, we will call you within 2 hours during normal business hours.
So simple, but nobody does it.
Tell them what happens after they hit submit. Will they get an automated email, a text message, a phone call from a specific team member? Removing the mystery significantly reduces the drop-off rate.
And finally, step 5. Treat it like a landing page. Your contact page is not an afterthought. It is the ultimate destination. Make it a true local landing page. Add location-specific details about the areas you serve. Put real photos of your actual team on there, not stock photos of models pointing at laptops.
Authentic imagery proves there are real human beings on the other side of that form. And this entire 5-step framework perfectly ties back to what we were just discussing about the CFO mindset and the measurement stack. A highly optimized, conversion-focused contact page is the exact mechanism you use to generate the clear, trackable book jobs and form submissions that you need.
It closes the loop.
When you optimize this page to convert at a higher rate, you get the hard data required to prove your marketing ROI to the finance department.
Look at how all these pieces fit together. What a deep dive today. Let's synthesize the landscape we just mapped out. The entire ecosystem is shifting. We're moving away from granular manual control, which is exactly what we saw with Google, aggressively taking over ad pacing schedules inside restricted hours.
Loss of manual levers.
We're moving rapidly toward automated speed and workflow compression, evidenced by Canva buying up AI tools to own the creative loop, and WPP restructuring their massive agency model to survive an automated future. At the exact same time, the C-suite is demanding harsher financial accountability, forcing marketers to justify every dollar with a flawless measurement stack.
Puts a lot of pressure from all sides.
But even with all these massive sweeping tech and corporate shifts, the ultimate battleground is still won through highly optimized, trust-building local execution, like simply overhauling a contact page so a real human feels comfortable enough to reach out.
All of these systemic changes force every single one of us to adapt our strategies. This raises an important question for you listening right now. When you look at your own workflows, your own agency relationships, your own marketing campaigns, what stands out to your Uji in these shifts? Are you truly ready to let go of your deeply ingrained desire for manual control? If it means unlocking the speed of faster iteration, it is a very difficult mental leap to make.
It's terrifying to hand over the keys to the algorithm, especially when the budget is on the line.
It is. And it brings me to one final provocative thought to leave you with today. We've spent this entire time unpacking machines, algorithms, corporate finance, and workflow automation. But think about the logical conclusion of all this. If platforms like Google are completely automating how your budget is spent, and tools like Canva are automating how your creative assets are built, and massive agencies are automating their overarching strategy, will the ultimate unbeatable differentiator for your business simply become the unautomatable, deeply human authenticity of the actual customer experience you deliver?
That is a phenomenal question to chew on and exactly why we do this. Thank you so much for taking the time to learn and explore with us today. Your time is incredibly valuable and we appreciate you spending it getting sharp. Remember to keep digging into the sources and the ideas we unpacked in today's deep dive. Stay curious, stay adaptable, and we will catch you on the next one.